Yeah, good morning, traders. Welcome to Navigating Markets. It's been a turbulent few days, I guess, coming through in financial markets. We were asking yesterday whether the risk-on sentiment that we've been seeing was to be trusted, whether it was a dead cat bounce or whether it was a genuine bottom. And we've seen some follow-through buying in risk assets from the bulls, and maybe some evidence that perhaps markets can trade higher in the short term in terms of risk assets. The concern that we had a few days ago was that Q3, Q4 growth numbers were probably a little bit too high. Near-term inflation expectations were still pretty sticky, and that was somewhat troublesome. There was a lot of questions being asked about the Delta variant. Perhaps some of those questions have been laid to rest for now. I think there's more to this story. But let's have a look at what we're seeing, just to give you a sense of the flow that we've been going through the floors. I'm going to start off with equity markets because, if you have a look at the price action, the CAC up 1.9%, the Russell up 1.8%. That was up 3% yesterday. So there's been this big sell-off coming through in the bond market. We'd been expecting it. The question was when it was going to happen. The bond market was so overbought. It was pricing in an awful scenario playing through. And we've seen that snapback now, which we'll talk about the bond market in a minute. But the Russell was up 3% yesterday. We talked about it in a video, which we put out on social. But we've seen good follow-through buying in the Russell. Let's have a look at S&P futures and have a look at that tape as we went through Asia yesterday. A bit of a pullback going through European trade. Then really about 10 to 10, the buyers stepped in, and we've seen this really nice move up playing through in US trading cash sessions. So you can see that up 0.9% through that period there. But you can see the tape coming through in S&P futures. Highs of the market at the moment. Market will take that. So really, really strong session. 0.8% in the cash. But European markets firing up. Of course, we've got the ECB meeting coming out later today. The market is expecting a dovish turn. There's no real reason for the ECB to be anything other than dovish, to be fair. I think equity markets are probably front running that, not just to mention that, but also the snapback in risk more broadly. But do have a look at your euro exposures and euro asset exposures as we go into that ECB meeting tonight. As you say, the market looks pretty good and pretty healthy into that situation. Let's have a look at the DAX. Going on a 5-minute chart there, but you can see that the market there finishing on the highs of the day, which the bulls will take. We've still got to fill this gap into 15,477. But European markets are looking pretty good at the moment. But US markets, if we have a look at the cash move that we've been seeing in the S&P, now that has filled the gap. And you can see here that it looks probably that the market's tilt is that we're going to see new all-time highs coming back into this market. So I like this on the long side at the moment. We've regained the 5-day exponential moving average. I think value seems to be working quite nice as a style. And tech, again, also looking pretty good in that situation. It's difficult to go past the bond market because, as I say, I think that's really been integral to what we've been seeing. If we have a look at 10s, we've seen this move really starting from the 13th of May. We sort of dropped down into 112 or so. We've had this pin bar reversal. The bulls have followed through. We've filled the gap. So it's make or break time. Is this going to, now that we've filled the gap on 10s, do we continue to push higher? I suspect that's going to be the case. I think a lot of this move that we saw really from 142 down to 112 was flow driven. I think it was CTA driven, momentum funds and trend following funds. I think they probably had their fun now. Probably a lot of this is now over, and I think this richly overbought situation is now getting pared back. So I wouldn't be surprised if we saw 10s moving into 135, 140. Obviously, we're going to be front running next week's Fed meeting, and obviously the ECB meeting may have an impact on that. But you can see that this pin bar reversal has seen some follow through, and on 30s you can see them up nearly 6 basis points as well. So good follow through buying there. That is telling you, a lot of the picture that we're seeing across the floors today. Have a look at commodity markets. Oil is flying. Oil price up 5.8%. If you have a look on that daily chart, you can go all the way back to this high that we saw back in April 2019. But you can see that this series of highs has found support. Now, we traded through these levels, but the buyers have stepped back in and it's managed to hold there on a closing basis, which, of course, is so important. But look at this. Bang! Up it goes today, 5.8%. So crude having a really strong move. Have a look at silver. We've got the bullish outside day. We've traded to new lows. And you can see here that the buyers have stepped back in. Now, I think a lot of that is a dollar play because we haven't really seen it like resonating so much in the gold market. But if you're looking in the precious metals place, at the moment, gold is looking pretty. Silver's looking probably the better of the two metals. Let's have a look at gold. This is one I put out on the Gold Weekly video that we did last week, and we'll do again today. But you can see we were looking for a potential move up to 1854 or 1803 to the downside. It has come down to the downside. We've held these lows. You can see that we've managed to push through there, but it's actually closed back above there. So we've got to the levels that I'd probably be looking at mean reversion changes coming through. But I think that move that we've seen in the bond market with yields moving up has weighed on gold. The interesting thing then, if we have a look at what's happening in FX markets, there's reversals going off all over the shop in FX markets. If you have a look at the dollar, now we're not quite there at the moment, but you can see we traded to new highs in the dollar index. Whether we can close below yesterday's close is yet to be seen. It's looking like that's the case. Again, a lot of that's down to what we're seeing in euro dollar, which you can see is not doing a lot. It's still holding these series of lows down at 117.69. That's something that you do need to concern yourself with. If we do see a firm close below here after the ECB, then I think that bear trend can continue. So that's definitely a trade that we've got there. We've got these series of lower highs playing through, and again, that just needs to reconcile itself. So this is on the watch list. Euro dollar is definitely on the watch list at the moment, but you can see that there's not really a trade. Wait for the market to push me into something. Now let's see where the reversals have come through, because yesterday we got pretty bearish on what was going on the Australian dollar. It was a really ugly currency. Everyone was looking at lockdowns. You compared to the growth numbers that we're seeing in Q3 in Australia, we're looking for a contraction of about 70 basis points in Q3. Everyone was saying, well, they're shutting things down. We've seen retail sales numbers collapse 1.8%. Business and consumer confidence is all over the shop. With the low vaccination rates, about 14% of the country vaccinated, there's a good chance that we're going to see further lockdowns. That's just going to continue to lead to economic fragility playing through on a relative basis. But what we've actually seen is a positive move. Maybe that's because oil's up. Maybe it's because you've seen a risk-on thematic playing through, and the Aussie dollar's just seen some short covering. But you've seen a bullish outside day on the Aussie dollar. You've seen the same thing to a degree on the Aussie yen. Bit of indecision in Aussie Swiss. Aussie CAD hasn't really done much. It's still trading through these lows. So again, you're just playing against the crosses. And then Euro Aussie has seen a bearish outside day reversal there. So reversals in the Dixie. I think if you have a look at sterling yen, there's a cheeky one there. That looks looking pretty good. Sterling Aussie's powering ahead. So when we talk about the Aussie dollar, it's really been a dollar move, I think, more than anything else if you go across those crosses, because we've seen Aussie yen looking quite strong and Aussie dollar looking quite strong on a relative basis. But I think a lot of that is down to the risk sentiment and the fact that the dollar and the yen are risk proxies that you've been seeing, and the dollar index looking like is that going to have that genuine reversal playing through? Let's have a look at stocks. Meme's under a little bit of pressure, but if we have a look at names like Delta Airlines, if we have a look at Carnival Corporation, really strong move. American Airlines, so you stay at home, or your reopening stocks have been working really well in that situation. Now let's have a look at crypto. Big moves playing through. I mean, we've just seen the conference playing through. Elon Musk defending Bitcoin again, saying that he's buying, saying that it's re-evolution playing through. The carbon offsets and the pollution side of things is looking a little bit better, and it's evolving. But they've defended these lows quite vigorously. So some big moves playing through. But I don't think we're out of the woods. I still think there's going to be a lot of chop. I don't think that we're going to see an explosive move back up to 35,000 anytime soon. So a lot to look through in FX markets, a lot to look through in indices. It looks like the market wants to squeeze a little bit higher. We've got a really interesting setup on euro dollar, and on the Aussie crosses, so certainly Aussie dollar and Aussie yen. Can we see follow through buying? Can we trust that move? I'm not so sure. I think people will still be looking to sell into that rally there.